Recording. Okay, very good morning, everyone. Good morning, personally, to Rob today. He's joining me for the morning session. So we were just talking about my loss that I took yesterday on US dollar CAD. Sorry, Rob, it's going to bore you, but I figured US dollar CAD yesterday. Why not take the position? I'm in a refined area. Price was in an area from before. We had that break below what I perceived to have been a structure point in the market. So for me, I've got the setup pretty much confirmed. And then, as I was saying to Rob, the only thing to take that from a good trade to a great or a textbook trade was to wait for a break of structure. So I took that as a sell limit. I took a loss on that. It's not something that I'm completely hung up about. I figured it's a good loss to have taken. If I was wrong, which I was, as you can see, I'm completely wrong because price just didn't want to turn around at that area. So I'm always happy to take limit orders from my highs and lows of my points of interest once they're refined down to the 15. I said I had the rejection from that area, so I was pretty happy when the limit order triggered anyway, but it wasn't to be. I was stopped out pretty much instantaneously, and then price moved up to the highs. Nevertheless, I've kept that on the chart. I can now get rid of that because I know many people want to see me produce losses more than wins. So that's a loss yesterday, everybody. And no other position was taken in fairness. Bit of a quiet day. Was expecting some areas to provide a bit more liquidity, but they did not. And that's, of course, as a result of our beautiful DXY. So we get into the DXY. Of course, it's going to bore you all. I still don't know whether to refer to, well, actually, now I do know. The DXY is very much so, in my opinion, in a range. I had the alternative yesterday by looking to see if I put this order block back in the market, this 4 hour order block here, as a result, much like on US dollar CAD, we've had that break below the range. And you guys know when there is a range there, I am always looking to have a break out of the range only on the 4 hour time frame. Not interested what it looks like on the 15 or the 5 or the 1 minute or anything below that 4 hour. For me, it's concrete, a break of structure on a, or from a range comes for me by way of a 4 hour candle. Therefore, I had that here. It matched beautifully on US dollar CAD. We were completely in sync. Price came back up. Look at that beautiful rejection. All times to get excited. And then, of course, when price looked to come back yesterday, I took that short position on US dollar CAD and it wasn't to be. We fulfilled the range. So, therefore, I'm pretty concrete now that we are not looking to trade on US dollar CAD currently based on higher time frame directional bias. I believe that we are just fulfilling the highs and lows of the range. And here was an opportunity where my strategy failed me. That in terms of we've had that break, there could have been the potential for that lower high, for that lower low continuation, much just like US dollar CAD, exactly the same. It wasn't to be. So the fact now that I can recognize the DXY is in a range. I'm happier now to short the DXY because I have that confidence to say, well, we've actually just fulfilled the lows of the range. We fulfilled the highs of the range. If I look at previous price action to support my bias, we're just ranging. Head to the daily time frame. Is there anything to suggest that we are not in a range? Look how the DXY can move, and look what the DXY is doing now. Evidently in a range. Therefore, today, until I'm proven otherwise by way of 4 hour candle breaking above that area, I am going to hedge on the side or lean towards the side that we are trading in a range. So I think that just having that in mind is quite good moving forward to understand, well, actually, DXY weakness for a moment. And the way that I'm going to look to solidify that is trade the DXY. Well, not I'm not going to speculate on it, but if I am going to mark it up as a pair that I'm looking to trade, I'm just going to have structure points high, structure points low. I'll get my confirmation by way of a break of that structure point, pull back into a point of interest, look for the short on the DXY. That way, we will go to the cross pairs to understand, can we see the alternative move, i.e., break up to the highs, pull back into a point of interest, look for the long continuation, and then perhaps on US dollar CAD, maybe we can look for something similar. So that's the bias going forward on the DXY. And I'm not even going to really discuss the higher time frame points of interest because ooh. Hmm. I've just seen, in fact, that previous daily candle yesterday. Mm, hmm. This candle now is almost throwing everything I've just said, maybe on its head. We'll continue for now. The reason why, if I'm wrong by my illustration, and this is where I can be quite dynamic. So I'm in a range based on these wick highs, and there has been no candle close above that area for a considerable point of considerable time. Now, yesterday's daily candle, if my illustration is just an illustration where the market doesn't really give a damn about how we draw order blocks and ranges and boxes and pretty colors, we have now had a candle close above an area where I do not see a candle do that previously. So if I now say, well, actually, this first daily candle that closed above is now a high, it's quite evident to me now that actually the DXY is probably going to remain bullish. So that's how we got to be dynamic. And now I will revert back to, sorry to waste your ears, everyone, but I've just seen it. I now will revert back to, in fact, the DXY has now made a high. So I do expect the DXY to pull back, but where could it then look? Where could it look to pull back to? In my opinion, at the moment, it's going to be the 4-hour 50 EMA before potential continuation into our higher time frame point of interest. So again, we do have two trails of thought, but we must move with what the signs are on the market. And I think that daily candle yesterday closing above that area, as you can see, it changes the dynamic quite a lot because you can evidently look and see that the 15-minute time frame is trending. We haven't, in fact, we have just made a high as well on the 15. So let's keep those two thought processes in mind, and move forward to see what our cross pairs are actually giving us anyway. So let's have a look. UJ, first and foremost. UJ, what am I looking to do with UJ? So highs and lows on UJ. To be honest, UJ is stemming from the higher time frame points of interest. We've got that weekly order block up here by way of bearish engulfing candle. Refine that area down. I like the fact that actually the daily order block is above, and look where we are. We are trending within that time frame, at within that order block, within that point of interest at the moment. So I'm pretty much only looking to take short positions because we are in that higher time frame point of interest where I am expecting a reaction to the downside. Regardless of that being wrong in the future, I must stick with that bias and trade out of a higher time frame order block to the downside if that's what it's telling me to do so. So I am only looking for sells on UJ. Now, the higher UJ moves within that daily order block, the better. So I'm not going to be really looking to anticipate anything anytime soon, because if we just simply revert to the 15, regardless of having it zoomed in or zoom out, what's the overwhelming bias? So it's just if I skip a bit, higher high, higher low, higher high. This could have been a break of structure, but look what happened. Higher high created. So to be honest, our structure point to be concrete before looking for a short position is actually down here. That's facts based on basic price action and structure. Wherever the most recent high was created, the higher low is now your structure point. So here remains for me a key structure point, which I'm an aggressive trader. So it's very unlikely that I would look to wait for that to be broken before looking to take shorts on UJ anyway. But I do know that for me to take the best type of position I need to take, I need to wait for that to be broken, pull back into an area of interest around here before then looking for the short. However, I believe because we are pretty close to, well, let's give it a quick measure. It's probably going to be about 100 pips. 65, because we're pretty close to that point of interest where if you're going to ask me, well, Charles, look at this as a forecaster, financial analyst, where would you foresee price to gravitate towards and where would you look for reaction from? I must overwhelmingly revert to my higher time frame directional bias and say, well, based on that 4-hour time frame, where have we had a reaction from? Very clear to see we've had a reaction from these highs. Therefore, if price wants to return back to these highs, I'm looking for a reaction from that area. We don't trade from higher time frame order blocks, so I'll be looking to refine that area down. And if I zoom out, if it will let me, or I'll move to the left, look at that there. So for me, here would be your best opportunity to wait for reaction. And again, like on US dollar CAD yesterday, for me, this is worth just for me personally, not for anyone else listening, because I really would like you guys to revert to waiting for at least a 1 minute break of structure. Or if you trust me that I've got the data, then go for it from time to time. Limit orders work, limit orders don't work. It's just we can say, excuse me, a luck of the draw. You can just revert to that. So whether you're risk adverse or risk not, then it's down to personal trader. However, here for me, much like US dollar CAD, if I took a limit on US dollar CAD yesterday, I have exactly the same circumstances today. 4 hour order block where I've had a reaction which broke structure to the low. I want price to come back in, potentially then give me a reaction again, I think would be best to understand. Or if the DXY is in a nice point of interest up at the highs, I believe that could, well, where are we? We're really at the highs of the range. So for the DX, for UJ to move slightly higher, we just quickly revert to what we could anticipate. The DXY where could the DXY go? Well, I think if the DXY moves this high, UJ is going to go right through that order block anyway. So my suggestion, and actually what I will look to do, is wait for confirmation because it's not really aligning with the DXY in terms of distance. Just by eyeball, we can't really say, well, if UJ just moves 65 pips for the short and DXY reverts to its higher time frame point of interest up here. I think by the time we get to these highs, UJ will be ready, perhaps, and then there's a risk of ruin there, in my opinion. So I'd be quite tentative with the UJ short. I'll be honest. It's a little bit different circumstances compared to UCAD yesterday. UCAD, we were there in that order block. Why not short it? The difference is we got no confluence on the DXY to the left to look for a short based on where we expect UJ to be. So that's the difference. So nevertheless, I think UJ looks all right. Higher time frame directional bias, it looks good. It's easy to suggest only one direction because where we are in a higher time frame order block. So I like UJ. So what I'll do, I'll move these alerts up so I don't get tempted anytime soon. I'll put one below in case in case the dollar takes a dump, then recovers and then pulls back into this point of interest before looking for the short. And with that said, I won't be looking to short UJ before I get a break of structure because if you revert to what price action is doing now, I mean, just look at the daily time frame. We are bullish, so we need to wait for something considerable to break before looking to short. There's no need to anticipate that reversal now, especially because we're not in its point of interest where we perceive a turnaround to occur anyway. So UJ, a bit of a patient wait, alerts above, but alerts below. I'll move that slightly lower in case I'm on the golf course, and that's UJ to be quite honest. US dollar CAD, let's revisit it. So, took an opportunity, as I said, I think it was a good opportunity to take. It's one of those. It didn't play out. Nevertheless, look where we're heading, just to a better point of interest to potentially look for a turnaround in the market. So again, it's looking good. Maybe I'll have to revert back to the DXY at some point to try and understand, am I missing a point of interest on the DXY? Because UJ is lining nicely shortly for a short. US dollar CAD again is aligning nicely as we start pushing higher into those points of interest to look for a short position as well. So perhaps I need to dig a little bit deeper into the DXY to understand, am I missing a point of interest for the DXY potentially to turn around, at least for to make that higher low because we are bullish. So if we're going to trade that higher low, we'll understand that perhaps our cross pair with the primary US dollar or US dollar are going to be quite short-lived shorts, regardless of us going trading out of a higher time frame point of interest because the dollar is expressively bullish at the moment. So in my opinion, the short positions could be short-lived. But we know we do have range down to the 4 hour 50 mil on the DXY. So this is me just thinking out loud in terms of my analysis moving forward. If I'm going to short the DXY, I recognize that the 4 hour 50 MA is going to be where I need to manage my position by as a result of what we have now. We've got that high in the market, higher low where around the 4 hour 50 MA because that's my guiding light at the moment, and then look for that continuation. Therefore, UJ, I'm going to treat it the same, that it's 4 hour 50 MA if I'm going to look for a short, needs to be managed by that 4 hour 50 MA. It makes sense. Why? What's the 4 hour time frame doing? Respecting that 4 hour 50 MA. So use all the information, stack it, and use it in your favor, right? It's telling us what to do. It's telling us don't aim for, well, it wouldn't be the moon, whatever, the core of the earth, because we can't. The 4 hour 50 MA is telling us price is respecting it. Therefore, don't let your expectations lead the way. We are heading towards management at that 4 hour 50 MA, if not sooner. So short positions, short-lived, but I think there is money to be made. What do we have? So I've got a refined area there on US dollar CAD. So again, when I won't do it on the call, but certainly once I'm off, I'll reanalyze the DXY, and that will determine for me whether or not I'm going to look to take UJ or US dollar CAD as a limit order again when price gets there. So we'll see. But for the moment, I'll be looking to revert to the best type of entry. So as price wants to pull up, hopefully we can identify a place in the market in terms of that higher low scenario. And then once we have that break, leave me an order block up at the highs where we've broken, and I'll just look for that simple process. It works, right? So that's what I'd be looking for currently on US dollar CAD and on UJ. And as I say, if the DXY I can find a nice point of interest, perhaps it will be a limit order and I'll get on with my day. But definitely seek to at least have a 1 minute break of structure. It's only going to save you from an immediate loss. That maybe could have saved me yesterday on UCAD. So we'll take a look at that as and when it materializes. For long positions, not until we're down here. I need to be out of that higher time frame weekly order block for me to look for a long position, unfortunately. And in terms of Asia ranges, it's just too extended for me to really say, well, the break of structure has come from a specific area in the market for me to hang my hat on and say, well, actually, I'll be looking to trade it like that. It's a little bit too extended with no clear pullback on that 15-minute time frame, even zooming out like so. For me, the safest place, again, ask yourself if a random person on the street wants the best version of you to analyze the market and you tell them, where am I going to get a turnaround in the market? I'm not going to comfortably say here or even here. It is a refined area, refine it down, and then you can say, I'm pretty confident we'll see a reaction from there. Therefore, that's where I want to start risking money from, right? Nowhere in between, unfortunately. So up at these highs, up at these lows, that's where I'm looking for positions today. That's what we have on US dollar CAD. GU. Okay, so thought process. DXY, potential weakness, but only maybe just to create that higher low before the higher high. That means as a result of that weakness, can we anticipate going long on our cross pairs? Or if the long doesn't make sense, should we wait for the short? Let's have a look to see what we have. So higher time frame, where are we? Coming out of nothing on the weekly, coming out of this daily order block, it is. Am I correct? Yeah, it's the only daily order block in this leg extension. Why do you like it, Charles? Why are you going to put an order block there? Well, we can say on the daily, higher high, high low, high high, break of structure. Where's that break of structure coming from? Somewhere in this area. Is there an order block there for me to look to manipulate and say, again, wholeheartedly, that break of structure has come from a particular order block? Well, this order block here is mitigated and this order block is available. So I'm going to use it. Do I have anything to support that analysis? Well, price left, it came back, it's respecting it. Therefore, if price wants to hang around in that area, let me see if I can refine it or see if price will come up slightly higher before looking for the short. So I like it for the shorts, absolutely. However, in the here and now, can we look at anticipating a reversal type of position based on DXY weakness if we grab it? Let's have a look. So to the lows on the daily, we've just got previous daily lows. There's kind of a session low going on here, but for that wick creating a bit of annoyance. But we can still see it, right? We can still understand that price is kind of hovering in this area. We're not really breaking to the downside on the daily time frame. So we'll use it for now. Let's put it to the left and see where we come out. Does it make sense? Not so much make it make sense, because we can all create a pretty story on the charts to entice ourselves into a trade. but does it make sense? So structure on the 4 hour time frame, we can see where price can print bullish price action. We've had this break, which of course would entice us to look in and around these areas. We already understand that's where we want to look for the short, matches nicely. However, in the here and now, what do we have? So we'll get rid of that for a bit, and we'll seek to understand what we have on the 4 hour. So no order blocks to really play with. So that's the first criteria. There's nothing there on the four. So therefore, we're going to have to really revert to our 15-minute price action and structure alone to understand what's going on. We've got no real confidence, no real reason to be looking for a long position. So the best trader in you will say, well, actually, there's nothing on the higher time frames to tell me to look for a long. So why am I looking for a long? But because I know we all like to trade, we will go through the 15-minute time frame. But we can see overwhelmingly that the short positions, let's say you had a couple £1 million in your trading account, why would you look for the long? Or would you just not wait for the short? So that's the kind of thing we need to be moving towards. I get funded stuff. I'm not going to go out on a rant. I understand challenges. I get it. Everyone wants to pass it. You see the finish line before you even started. But in terms of trading, does it make sense? Not really. But that's just my opinion in terms of trading at the moment. But let's go to the 15 because there's always, well, not always, more often than not, there will be an opportunity. Let's have a look. So we know this is that session low in the market. We drew that even from the daily. It's making sense on the 15. Look at the reaction we're having from that. We are having from there, rather. Prices come in. We've moved to the high. Price returned again. We've moved to the high. But now what I'm seeing is a little bit different, I'll have to admit. So if price, remember we said there was nothing on the 4 hour. So we're pretty much reverting to 15-minute only, which is great fun. 15-minute always makes good sense if it makes sense. If it doesn't, that's your alarm bell straight away to suggest, well, actually, let me hold fire. So we're looking for price action and trends. So we drew this in on the market. Price made a high. Price came back in. Did we make a higher high? Negative. Price came all the way back down. Have we made a high? Negative again. Therefore, we can already kind of see what's going on here, that we could well be in a bit of a range. That's not the end of the world because if we're at the lows of the range, where are we going to be expecting price to revert back to? To the highs of the range. What's the DXY doing? Potentially, it could be in a range based on where I had my level before. We were at the highs. I moved it slightly lower because of yesterday's daily candle closing above it. But are we not still expecting a bit of a pullback on the DXY? Yes, we are. Does it make sense in that case to anticipate GU to move slightly higher? I believe so. We're not making it make sense, but it makes sense. So that's the difference. However, based on what's going on at the moment on the 15-minute time frame only, does it make sense to take a long position now? What's going on as we've woken up? We see low, lower high, lower low, lower high, lower low created. Should we be looking for a long now? Probably not, in my opinion. What would be best to understand? If we're ready, break of structure. I get it. Prices move without me, Charles. It may not come back. It is what it is, team. That's trading. We have our strategy. It's reliant upon breaks of structure and points of interest. Wait for the break, my opinion only. Pull back, point of interest. It's there and then off we go. In the immediacy, I always like to discuss the worst case scenario, which kind of sends traders in a bit of a, I don't know, well, when price comes back, pretty much. When price comes back to your point of interest without any break of structure, I get it. You're thinking, it's there. Do I take the position? Well, first and foremost, you need to kind of understand, am I in the same looking position as I was yesterday on that UCAD trade? Do I have similar confluences to say, because let's face it, a limit is just the same as an entry now. Do I have the go ahead for an entry now based on what's going on? I don't really think so because price is bearish. Therefore, are you going to take a long position when price is clearly showing you that it's bearish? Again, I get that you want to trade, but let's say you've got a £5 million account and a loss is going to cost you £50,000. Does that make sense to take a long at the moment, even if price reverts back to that point of interest? Personally, I don't think it does. So therefore, when price comes back down, worst case scenario, without breaking the highs, price starts to trickle its way down. I do still think the best thing to wait for would be this break of structure because as price pushes down, price is simply looking to make that low. If price doesn't make that low, then you've got an opportunity to be slightly more aggressive. Wait for the break of structure as price was printing down, which could come by way of bullish engulfing candle or a couple of 15-minute candles to break structure to the high. Asia may well be available as well to give you that confirmation that price could well look to gravitate towards the high. But the bottom line is, I would definitely be looking for a break of structure of some sort before looking to go high. Don't forget, of course, without thinking it's the worst trade ever, we do have the confluence from the DXY that we do believe DXY could roll to the downside. So it's not the best looking position, but we can understand why we might want to look to take a long position. So what I'm going to do is I'm going to have an alert down here because I can't take anything without price coming into the order block anyway. That's way too premature. So what I will be looking to do is if price comes back in, I just want to see what the reaction is going to be like. And that will safeguard you against the loss taken yesterday for me on US dollar CAD. Price is going all the way through. Just wait to see what's going to happen. If you get a nice explosive move, just wait to see if it comes back. If it comes back, make sure there's an order block there. And then off you go to those highs. I say highs, 4 hour 50 EMA is going to be the immediate target, which again, therefore, going to probably need to wait to ensure that you've got the range to get up to there anyway. To paint the picture, long from and around that area. GU, what's that? 10 to 15, I'd say maximum. That would cover what I would be looking to cover if you seek to refine our little area down. Here's where I'm concerned about price gravitating towards. So I'd have my stop loss about there. Do I have the range to the 4 hour 50 MA? Uh, it's enough. I can at least move to break even. And then we'll just have to see how the cookie crumbles in terms of that DXY weakness. If the DXY reverts to our initial thought process of being in that range, then of course, as the DXY seeks to melt, then we'll be moving up towards these highs. And actually, daily 50 MA, no, unfortunately, we'll be looking for reaction from there at the very least. But price action shows it's going to do what it wants to do anyway. Therefore, we have to just be strict in our own application. At least we can get one thing right. If we can't control the market and what price action is going to do, at least, at the very least, we can get one thing right by trading our strategy to the best of our abilities, right? So I think that is a half decent plan moving forward, certainly for myself today. Break of structure or just see what goes on and around this area. Anyway, I'm not doing too much today, so I'll be active in the charts with you all. And I'll let you guys know what I'm seeing at a particular point in time. But I will be having to revert to the DXY to see what's going on. Because if the DXY is giving signs of continued bullishness, by the time it gets to a point of interest where I'm looking for a reaction, then I'm going to be a little bit tentative here. And I will want to see something quite concrete. So that's GU at the moment, not looking bad. EU. What do we have in EU? Pretty much similar. In favor, weekly 50 MA for the longs, but it's coming up. The EMA is coming up. In terms of order block selection, nothing on the weekly 50 MA apart from we're trading out of it. We're a distance, so therefore I'm happy to trade back towards it. But then we revert to the daily and we can see here we are. Daily order block. Why, Charles? Why are you putting a daily order block here and not here? Well, here is what I always revert to. Simple structures. We've got a low in the market from and around this area or from and around that area. It's down to personal preferences. However, I am looking at price like this on the daily. So we've had a low created, potential lower high for, excuse me, yeah, exactly. Lower high for a lower low continuation. Now, the weekly 50 MA is kind of telling me that we may not get that lower low continuation, but it's not really my job to look for a lower low continuation. It's my job to look for reaction from a point of interest. So that point of interest is first of all being developed by the fact that we've traded back up to this area and the only daily order block that is available is here. So therefore I'm forced to put it into the market. Nevertheless, That's where we are at the moment. So we're trading between a decent looking range. And that's what we want to try and establish all the time. There would have been an order block here, but it's been mitigated. And the reason why I like this order block is because, let's face it, when price came into this order block that was there first and foremost, price tapped it and it flew. Then it's for us to understand, well, where did it move from? And here is the only available order block. So once we start to put that on the chart, refine that area down to a point of interest, we're here. So that's telling me at the moment, Charles, you could be acting a little bit prematurely in terms of looking for a long position on EU. However, what do I have to support that long position on EU at the moment, potentially sooner rather than later? Well, we've identified a structure point in the market where price was failing to break above or below. So I'll revert to calling that a range. And for me, once you have a breakout of the range, I say it again, it's all boring stuff. You'll hear me repeat things over and over again. 4 hour time frame. If I'm in a range, I want to see a 4 hour candle breakout. Nothing less. I don't mind anything more, but certainly nothing less. What do we have? High, higher low, potential higher high to be made. Could it be a higher high? I don't think so, based on 50 EMA, based on my overall bias of the daily time frame that we could be making a lower low or at least pushing down into this weekly 50 EMA. Therefore, straight away for me, I have bias on the 4 hour, but it's not as concrete as I would like. So straight away, without going to the 15, that's telling me that maybe be a little bit careful here, Charles, because there are certain things for you, but if you just take a little bit of a zoom out and understand, well, actually, I'm not even in that daily order block just yet. So therefore, I'm not actually in my desired point of interest. If you're not in your desired point of interest, you've got to tread carefully because we've done all of this work just not to use it. Therefore, if you're not going to use the work that you've done, you got to wait for some form of confirmation. That's just facts, right, guys? And that's how I trade. So therefore, I'm happy to take a long position from my area that isn't desired in the immediacy, but I'm going to need to see some breaks of structure, team. Why? Because as price looks to come down, we're bearish. And I don't mind trading long into bearish price action, but only if I'm from my desired point of interest. Revert back to my US dollar CAD trade yesterday. Happy to take limit orders all day long. Don't mind them, doesn't phase me at all. But I need to be in a point of interest that I like. I'm currently not in a point of interest that I like. It currently makes no sense to be looking for immediate positions from here, just in my opinion. So today, if we don't revert down to this point of interest, which I'd be glad not to see it go there, to be honest, I do need to see a break. It's as simple as that. Even if price comes down to here, okay, worst case scenario, price comes back down to here. I will seek to understand what the reaction is, but at the end of the day, I'm still going to need to see a break of structure of some sort from that area. No immediate positions whatsoever for me on EU. It's a shame, but we'll seek to understand price action. So at the moment, where can we look for structure? So we've definitely made a low from here. There's an order block remaining as well. Therefore, I'm going to call it a structure point. So the best type of entry will be price breakup. Hopefully, you get a 4 hour candle close above that 4 hour 50 EMA as well, which would definitely help the position. Then it's as simple as just waiting for price to come back down. If it doesn't, it was never a position for you to take anyway. If it does, that's the strategy presenting itself. Do not feel phased. Take the position. And just in my opinion. So that's the best entry criteria. Rinse and repeat, much of the same what I'll always talk about. Then you revert to that 15-minute order block and actually start to back yourself. Why should I be trading from this 15-minute order block? What did that 15-minute order block do in the market for me to want to risk money on it? Well, price was printing lower lows, lower highs, lower lows, and then for whatever reason, from this 15-minute order block refined down from the floor, we've had that move. Therefore, when price comes back down, I'm expecting a reaction of some sort. Simple as that. That's the expectation, and we'll keep it there. Not expecting to win, it can still lose, but I'm expecting a reaction. We must have some expectation for our own strategy. We must back it to some degree. So I'm expecting a reaction from it. And therefore, that's why when price comes down to a point of interest down at the lows, I may not necessarily wait for the best break of structure. This would be an aggressive position by me saying, okay, price is coming, oh, wrong one. Price is printing down, making lower low. This is without a break, by the way. Price is printing down, making lower lows, lower highs, lower lows, etc., etc., etc. If I can see a break of some sort, then price come back down to an imbalance left behind, I'd be happy to take it aggressive, but an aggressive position needs what? Rhetorically, I'll ask it. It needs aggressive management because as price comes down, although we've had a break of structure, let's say on the 5 or the 1 minute time frame, we haven't broken key structure points. Therefore, until we've broken this, we are still bearish. We have to understand that. We have to understand that taking a position without that key break of structure, we are still overwhelmingly trading against price action. That's fine, but we have to understand when to manage the position. And that's how trading's kind of had to been the last couple of months. Because if you're not in it first, price feels like it's moving without you. There was a point in time where price really was coming to those points of interest, tapping them and flying. Therefore, I went down to the lower time frames to try and capitalize on that. I didn't like my results because I was taking far too many positions, exposed way too much to the market. And as a result, yes, the returns were okay, but I was taking too many positions. I didn't like that. The people that invested in me didn't like that either. So I just had to change that style again pretty much just to how I trade normally. But when it's overwhelmingly in your face, and if this aligns with the DXY, then yeah, I will be looking at nice positions like that to take it long and move to break even sooner rather than later. I'm happy to do it, just not every day, like how I was a couple of months ago. That has definitely had to change. So sorry to bore you all. That is Euro US dollar. I think that's a potential, but just understand here is better, in my opinion. But we'll see how the cookie crumbles. Got alert set down by that order block. I've got an alert. Let me bring that down if price breaks that structure point. By the way, if price breaks a structure point and comes back to this area, I will take that as a limit order, more than likely, because price is telling me that we're pushing up. But one thing I won't do is take it from higher. I don't think that makes sense. If price breaks up, I'll take it similarly to this, have my stop loss below an area where I can see. Mm, can I do that? No, too much. It's just going to be trusting my analysis. Back to the 4 hour 50 MA, and that would do the trick. While I'm here, Asia range, just to keep you all a little bit longer. Can I see it? So we've had a break of structure. Look to the left. Yeah, we've broken that. Not broken that. Do I really want to risk money based on a 1 minute break of structure here? I don't mind as long as I have the range. Do I have the no? So done. I'm not gonna take a position based on a 1 minute break of structure, even if it's slightly. Because no, where do I really want to put my stop loss? Um, let's see. If I get a 1 minute break of structure that allows me to take this position here and allows me to get a 1 to 3, let me delete this so you can see it. And allows me to get a 1 to 3 by Asia low, then there is a potential. But knowing that 10 pips really should be the stop loss for the Asia range, it's just telling me don't do this at the moment. So I'll have an alert there. I won't keep the position on there to tempt myself into it. But I do see a potential for an Asia range because we've had a break of structure. Well, structure is telling me lower low, lower high, lower low created. Can I identify where that lower low came from by way of order block on the 15? Yes. Is it available? Yes, it's above Asia as well. So the thought process is Asia is liquidated to the highs, takes Asia highs, pulls up to the order block, 1 minute break of structure, look for the short back down to Asia fill. That's what I'd be looking to do. However, I just don't feel like I have the range to make the position want to make sense without me having to manipulate my stop loss to something very unrealistic. A 6 pip stop loss will never serve me well on an Asia range position, unfortunately. So I'm probably going to have to give that a miss, but I can see the setup. So I'm not tired. That's EU. GCAD, right, GCAD. Sells only for me at the moment on GCAD. The question is why? Well, weekly time frame, not too much, but we're approaching wick imbalances. I love wick imbalances. The wick in itself is such a clue. It tells us that there are sellers sat there. They didn't want price to go above that area before. Price wicked up and price pushed all the way back down. So when price goes to an area on the weekly time frame where there's a wick imbalance, I'm interested. And I just hope then once I refine that area down on the wick imbalance, it makes sense on the lower time frames because that will then give me the go ahead to actually look for a position. I can't trade just from a wick, but I can trade when price action and structure makes sense coming out of the wick and I can add it as a confluence. So daily time frame, it's looking all right just based on that little clip. Why? Well, we can see that price can trend on the daily time frame. We can also see that price can come in and break structure lows. Therefore, after a low, prices, of course, reverting back to those highs. It's normal price action. We're seeing it 15.4 daily everywhere. Low, lower high. I'm expecting a reaction to the core of the earth. Potentially not. It's not going to be me in that position for 500 pips. Unfortunately, I don't have the patience, but I'm in the game for a reaction to move break even. I hope we can get a nice 1 to 3, 1 to 4, 1 to 5, or even better. So this order block refined down. Why is it still on the chart? Well, because I don't really have anything else to the right that I can look to hang my hat on. And the importance of it is that price isn't breaking and closing above. And an additional concept, the wick is in the area. So I'm liking it. I'm liking everything about it at the moment. Then when we start to refine that area down, let's make this smaller and make this bigger because it's relevant. When we start to refine this area down, in fact, sticking on there, I've also got decent range when we refine it down to the conflict to take price higher, 4 hour 50 MA. So again, I've got range. I like it. Refine the 4 hour, excuse me, refine the daily down. We're now into the 4 hour order block. That's right up at the highs to the left-hand side over here. Price is, well, it's still available. Price is failing to tap it. So this is going to be the first time we actually get back to that 4 hour order block. And you say, well, Charles, what's the importance? Well, it's at the very highs of the daily. So it's aligning nicely with US dollar CAD. Then we have to ask ourselves, well, what happened from that 4 hour order block? Has there been a good move out of the 4 hour order block? Even if there hasn't, I'd still be interested because the daily's given the move. But look, from this area, we've had that move. Low created, breaking structure points to the left. I then want price to come back up. Give me that confirmation, or not the confirmation, give me the reaction. That's all I'm interested in, the reaction. It's going to be enough once we start refining our points of interest down 15, 5, and even 1 minute types of entries. We'll have enough range for sure. Now, how are we going to play, or how am I going to play this? I want to refine this 15, excuse me, I want to refine this 4 hour order block down. Even if I don't, I'll just look for a reaction. So this is old news at the moment, this 15-minute order block. I'm happy to see price actually smash through it. Excuse me for a minute while I zoom out to understand what's going on. Um, okay, cool. Has that been mitigated? Potentially now. So two trails of four. Again, best area, 4 hour order block. If I zoom to the left to see if I can locate a 15-minute order block, it's going to be a while away. But I will put it on there if it shows up. Sorry. Okay. Refine that 4 hour order block down. What do I have? Is there anything there? So available? No. No. No, nothing there. That's fine. I just have to wait for one to be created. So I can't take that as a limit order because there's nothing for me to limit from. I'm not going to go lower than the 15-minute order block because, well, it's just not what I do. Therefore, from this high, I'll already put my illustration on. I need to see a bearish engulfing candle. That's fact. It's got to be engulfing. Then I have to wait for that 15-minute order block to be shown. Then I'll wait for price to revert back. And then I'll potentially look for a short position. So that's what I'm going to be looking for if price gets to that better area. What's nice about it as well is, hear me out, we know that wick imbalance on the weekly time frame, it's showing as a wick. But on the lower time frames, what is it showing? I'll tell you, it's showing as a trend. So therefore, if we have a trend past that wick imbalance don't feel that the wick imbalance isn't doing its job. The wick imbalance is only important on the weekly time frame. Once this weekly candle closes and we've had a move like that on the lower time frame, guess what it's going to look like on the weekly? Currently, the weekly candle will be pushing bullish. We get it. But once that weekly candle closes and prices moved away, guess what we'll have? Another wick imbalance. And that's exactly what we're searching for. So that's the forecast moving ahead. We're trading from the wick imbalance, and we're going to use the confidence that the liquidity from previous is going to push price down, and we're not going to be bothered by the fact that the current weekly candle is going to look bullish, because we're going to expect to see exactly what price action can show us it can deliver previously. Another wick. Easy, 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 easy. Using previous price action to support your bias. That's all we're doing in trading. So, up at the highs, best. Let's say that doesn't materialize. Let's say price respects this 15-minute order block as it's doing at the moment, failing to close above. What am I going to do? Look for an immediate short position now while I'm on the call? No. I want to see some structure points broken in order for me to be comfortable to take a position before it gets to my desired point of interest, what we've spoken about already. And nevertheless, we can obviously understand why price may want to turn around here, because if you look to the highs, what do we have? A wick imbalance on the 4 hour time frame. So they all work, they all provide liquidity, but it's just if you're again, someone on the street is going to ask you, hey, I want a short from a wick imbalance on the day on the weekly time frame, or I want a short from a wick imbalance on the 4 hour time frame. What would be the best? You'll just revert and say, well, the higher time frame point of interest is probably going to be your best guide because it's showing you, forgetting about all the lower time frames, it's showing you that based on this weekly candle, by the end of the week, you've got probability to have a rejection. We only really have 4 hours for this candle to reject that wick imbalance. The moment price closes above on the 4 hour time frame, that wick imbalance to the left, then the wick is void. It hasn't done its job. But we know we have a good couple of days, well, at least tomorrow, for that wick imbalance to show itself. So we've got over 24 hours whereby currently, as soon as this 4 hour candle closes above that wick, well, the wick imbalance hasn't done its job. We've got to get rid of it because we're expecting a wick to be left behind from a wick imbalance, right? Simple. So, where were we? Now, here and now, how would I look to take this position sooner rather than later? Well, first and foremost, we've created what? A new high in the market. Therefore, after a high, of course, I am expecting reaction. That's what price does. It creates a higher low. Do I want to be in it now? Not really, because it hasn't shown me anything. I'm not using high, well, I am using daily, but it's not refined from an area at the moment. We are using just a wick imbalance, which we're happy to do. And actually, there was a 4 hour order block, which has now been mitigated here. So therefore, am I trading just from previous price action? I don't mind doing. Yes, I am, where prices fell into break above and below. So we do have some confidence there. We won't toilet on it completely. There is a reason to sell from this position. That's fair to say. But I need to see a reaction, I'm afraid, because price has come up there before. Has it? Let's have a look. Yeah, prices come up there before, and we have had a low created. So you know what? It does kind of make good sense actually to short from here. So we've had a move, price come in, gave us a break, price come back, gave us the move. So it's pretty much the same on the daily, but actually refine the daily, we're kind of there. So let me show that on the 15 minute so we can see. So I hope you guys also see that my bias changes as and when I'm looking at price action. Um Oops, what have I done there? I think, where are we? Where are we? Uh, why is that not showing? Oh, there we go. Cool. So refining the area, we're pretty much there. Equilibrium. How will I look to play this? Right, we're bullish. That's fair to say. So we've got a key structure point. That's the best. Wait for that to break, pull back. We're in the worst case scenario already. So what am I going to do? I want to see at least this broken. I think that's fair. Even better, this area broken. But in terms of aggressiveness, would I be happy to take it aggressive? Would I be happy to take it aggressive? GCAD. Um, we'll see. I need that to be broken first and foremost. I've got to give myself a chance from an area where it originally wasn't my favorite area, but that's trading at the end of the day. Sometimes It happens. Does it make sense to be shorting from there is what I'm constantly asking myself. It does make sense. So therefore, I'm happy to be aggressive, but I do need to see a break of structure. I'm not just going to take it now because price is there. That's not how trading works for me. Got to see something first. So I'll change that to strike. In fact, what I'll do, I will, what's going on? I'll move that to here, wait for the break, pull back up into a lower time frame point of interest, maybe a 5 minute order block that will be left behind as a result of the break. And then I will seek a potential aggressive short, but that depends what everything else is showing as well. But for now, I think that's probably worth a decent risk. And therefore, we've got protection because we're not taking it straight away. We're waiting for a break. That will give us at least something in terms of confirmation. Wait for the pullback and then look for the short. Do I think that's the best position to take today? Mm, it doesn't look bad, I got to admit. Just because it's not in my desired point, it doesn't degrade the position. I can definitely see a reaction from that. What I really want to see is just prove to me that this isn't a higher high for a high, excuse me, higher high, higher low for a higher high continuation. Once I get that break and I get the pullback, then I know I'll have to be trading to around these areas, if not these areas. And I think we have good range. So actually, yeah, I like GCAD. Do I love it? No, but I do like it. So I've got an alert there. I have an alert if price breaks that 50-minute order block as well. And we'll see how price crumbles. So I think that looks all right. GJ, where are we on GJ? So GJ, bit of a boring one. I'll have to be honest, team. I'm only looking to take a long from here, or would I take an Asia range from there? Let's be honest. If I get GJ, if GJ breaks this area and pulls back, I will take a short from there. I absolutely will, because using previous price action, what I was looking at this morning is how is price respecting those order blocks that are being left behind. So if we start to put them on, forget about the color, but you know what I mean. Break, order block, break, order block. Look at that. So when it comes back, it moves based on what? Nothing new. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Didn't come back. We created what we could perceive as a lower high, but was the lower low confirmed? Let me scroll over. Um, Not really. So that's why I said if we can get a break from here to give us that lower low and price comes back up to this area, or I'll be honest, even the position where price broke structure from, I'd be quite interested in a nice little aggressive short position there on GJ. However, I will definitely say that I am happier to wait for the long. Either way, because I do see prices just gravitating down towards these lows. I think that's clear to see for everyone. We've definitely broken structure points to the left. Are we trending? We absolutely are. We're coming straight back to the order blocks. We've only missed one. So taking this position when price gets back there, I think even if you just keep it to the 15 and say, well, what I'm doing, does it make sense based on what price is also doing? You know, it's like saying, well, should I long when price gets here? Well, is that what price is doing? It's not. Price is making lower lows and lower highs. Therefore, when price pulls back for that lower high, I pretty much want to be in it. Can I lose? Yeah, I can. But is there good risk to reward ratio based on the short? If I short from here, tuck my stop loss above a nice area where it would have worked before, head down to those lows. Yes, please, I'll take it easily. So I think that's pretty a good looking trade, but I am going to need to see a break to confirm that this area is good. And if not, just based on even being zoomed out, I'm not really happy that we've made a break just yet to really take it from here. So I want to see a nice 15-minute candle break this area, then pull back, and I'll take it from here. And yeah, we'll see how that goes. What I mean, just to explain that a bit better, from this 15-minute order block that's still available, if I think it is, yeah, this 15 here, that's the better area. But if price comes back right now, I'm I'm not as comfortable as I was before because, well, we haven't really broken structure. We've just kind of moved sideways, if you're with me. And that's the difference between taking a position that may not be ready and taking it when it's ready. If we get a break, then I think here would be the best area. So here, what I'd be looking for is a 1 minute break of structure. Here would be a limit, or at least wait to see how price comes in and then take a position from there. So two nice points of interest, but I want this wick to be taken out and I want to see nice 15-minute candle below, pull back short, easy. But again, I'll put an alert on it when price makes the move. I'll drag it down and we'll see what order block we get the reaction from. That's the best we can do. That's GJ. And then finally, AU. Still waiting for AU to really give us those best signs. Won't bore you, higher time frame, weekly order block looking to go short. That's fair to say. Bullish structure. We have made on AU a high from here. And it's in the eye of the beholder. Have we broken structure to the low? Have we broken that daily 50 MA just yet? I think today should be the day if we're looking to do it. What I mean is break of structure, pull back, that's off we go. That's the thought process that I have. However, without taking that sooner rather than later, would I be happy to do so? Yes, because of the overwhelming want to short from that higher time frame order block before it's too late. We were up at those highs. There was no real entry from it. I'll be honest, a bit of a shame. Nothing that I could get back into. It moved. It never pulled back. So here at the highs, it still remains my best point of interest. However, as price looks to develop, maybe we won't revisit those highs. So we've made a low from here, breaking structure. So currently we're in the formation of making a lower high. After that lower high, I believe that lower low will be created. I think today, hopefully, the lower low should be created and then we'll get that daily candle close below that daily 50 MA. Why I like the short position sooner rather than later is now the daily, excuse me, 4 hour 50 MA is on side. So therefore, any 4 hour candle that creeps up within that 4 hour time frame, I'm expecting a reaction. Leave me a wick to the highs, rejecting that 4 hour 50 MA. Why do you think like that, Charles? Well, let's have a look at the most recent 4 hour candles that also were trending in and around that 4 hour 50 MA. Look what happened. I tell you guys no lies. It's the charts that's telling me what to do. This candle at some stage was bullish above what? The 4 hour 50 MA. What happened by the time 4 hour candle closed? We rejected it to the highs. So I like the fact that price is beneath it now. And when price starts to print above it, that's all good news. Entering for me on a bullish 4 hour candle where the EMA is opposing it, I'm just expecting that every single time. So I know price is distance away, but it is what it is. We have to kind of move with what's going on. If I was to be super aggressive and not revert to price returning back, placing a 4 hour order block here because it's the only 4 hour order block remaining, and once I do that, I'll have to put that on all time frames and then refine this area down. I put the highs around about here, where that is the highest 15-minute order block available. So best because it's available. Good option because of based on 15-minute price action. Now it's down to me to ask myself, well, Charles, you've just put some pretty colors on the chart. Does it make sense based on price action? You seen any breaks of structure at all, Charles? There we go. One. So are we now trending? Low, oh, sorry, low, lower high, lower low, not really confirmed. Price came in, lower low created. Therefore, I'm now seeking to understand, have we made the low from here or the low from here? It's a risk. That's trading. So therefore, limit order perhaps up at the highs, break of structure required here. That's the difference. You can't take limit orders on two areas in the market where you perceive a reaction from. You've got to change something up. You can't do the same thing over and over again because that will open you up to stop loss and then oops, you get the idea. Stop loss. We've got to change it up. Higher time frame, excuse me, highest degree of entry criteria here. or even a 1 minute break of structure and then a limit. I wouldn't do a limit order here because my stop loss can't cover what I need to cover. So here I will wait for a break of structure as well, but perhaps not at the to the same level as the degree break of structure that I want to see here. And that I think that is probably a good looking favorite for the day. But they all look good. They all have thumbs up in with some degree or another. So I won't take any more of your time, I should say. But Rob, I thank you personally for joining. I hope it made sense. You could be my guide if you're able to unmute to tell me if it did make sense. Have no reservations to tell me it was absolute bollocks. But I think going through the charts, we got a lot to think about. And I think the easiest thing, let's just wait to see what happens. That's all we can do. But no immediate positions for me. I'm not in anything either. And do you have any questions, Robert, at all?
No, none at the moment. Thank you.
Cool stuff. Well, I'll post what I've got when I clear the charts up. I'll post it all into the chat for us to have a good look at. And for now, we'll just my saying of the day, I think. Let's see how the cookie crumbles. So we'll give it a go. Take care, Rob. Thanks for joining, my
Yeah,
friend.
and you.
Back
Yeah, thank
tomorrow.
you.
All the best.
Ta-ra. Bye.
Bye bye.